sign a personal guarantee?
No.
The owner? No?
No.
Okay. So this is non-recourse in most situations, basically non-recourse.
Right.
So
right.
That's a real big thing because these are people that may have kind of crummy credit. So what happens if their credit's kind of crummy? Personal credit's kind of bad? Are they going to be able to get this, or are they going to go, not really?
No, they're okay. Personal credit is okay. Personal poor credit is okay in this particular instance. It's more of a factor when it comes to the bank loans, the banking products.
Okay.
It is more of an, they make more of an evaluation. But if the company and the business has the historical, the historical cash flow that's required to meet the guidelines here, typically we're going to get them funded, regardless of their credit. And I know that's a big difference with the banks. The banks are definitely looking at credit.
Yeah, that's a huge difference in banks, and that's a very big. So, okay, let me ask you about some scenarios. What about somebody who's filed for bankruptcy personally in the past? That's a good question. I don't believe that would prohibit them from this program, but I don't know the answer to that, to be honest with you. It's a good question. Okay. What about, let's go back to startups. Give me a very simple rule about whether we can do a startup or not, if I can use.
Here's the thing with startups. They are one of those, they're very, very case by case. What I would look at there is, does it make sense? Does the borrower have the history that looks like they'll be successful in their startup endeavor? And they are, that's really what we're going to look at. Their resume. Do they have the tools to succeed in whatever startup endeavor that they're getting into? And then it's really going to get into an underwriting call at that point as to whether or not they can qualify. My best answer there is, if you have somebody that's looking to do a startup and they need some capital, by all means, just fill out the one-page application, and we'll get on the phone with them, and we'll know within 24 to 48 hours whether or not they qualify.
Okay. But there's a rule about restaurants, startups. Can you just explain that again so I'm really, really clear on that, please? I think you said that restaurants have to be 6 months minimum in business before they'll be considered, regardless.
Restaurants do, yes. Okay. Restaurants need to be, if it's, let me put it this way, if it's a franchise, then that would be, they could do, if they were getting into a new, let's say you had somebody that was looking to start buy a Subway franchise, but they had never done a Subway before.
Yes.
That would be considered a startup, but yet they could qualify.
Okay.
Yeah, okay. That would be okay. If it's a mom and pop situation, okay. Then we would want to see 6 months of history.
Got somebody who already has a loan like this. Can they get another one with us, and if so, how?
That is our number one target, actually. We definitely go after our competition, and the best way to do that, again, is we just look at we look at what they've currently been funded, we look at their current balance, how much is left to pay off, find out what their terms are that they're currently paying back, and typically we just make their terms so much better that they can't afford not to go with us. At that point, we would then pay off their current balance with our competitor through the new funding that we would offer them, and then they become our client.
Perfect. Okay, perfect. I'm glad I asked.
Yeah.
Somebody who hasn't filed tax returns in several years, or many years.
Again, I don't think that's an issue. I'd want to get a little more clarification for you, but I do not believe those personal issues that you typically find on a loan typically do not apply here. It's really, we're looking at how's the business doing. Does it look like we have a reasonable chance of making our money, back in the next 6 months, 12 months, or whatever it is. So it's, I want to say, that the answer is that's not a factor. But I'd like to check that for you just to make 100% sure.
So tell me how easy it is. I've got people I know who want this. What do I need to give you to get the ball rolling? How involved do I have to be?
Yeah, again, one of the best parts of this program is the lack of documentation that's required. As one who does a lot of commercial loans and lending, it's all about the documentation. This is refreshing from that sense. We have a one-page application, which can be found on our site. That application plus the last 3 months of the business bank statements. Now, those do need to be all pages of the bank statements, should state that, plus the last 6 months of their credit card statements is all we need to get a decision. And then, again, that is to go from 0 to an approval in a day or two. So it's really a simple process. I don't know. I can't say it anywhere other than that. It's just
I think that's extremely simple, man. That's about it. There's not much to say.
I'd like to complicate it, but that's really.
So when we say credit card statements, we're talking about merchant account statements.
That's right. Yep.
Merchant account statements, and that's
right.
it. I mean, this is as easy as you're going to ever get. And do we check their Experian and TransUnion and Equifax personal credit? Do we check their Dun & Bradstreet business credit? How extensive do we go on that?
No, not for the merchant program.
Okay.
Again, we got to make a little distinction because if they're going to qualify for the bank loan or the bank product, then we would. So I want to try to kind of distinguish the two. The merchant program, this is the merchant program right here. This is the simple one. If they need more money or longer terms, and that's what and you know that they need that, then we would want to look at one of our banking products. And the only change there would be that you still need a one-page application, but we would want to see 12 months of business bank statements and also 12 months of their merchant statements, their merchant credit card statements. That's the only difference. That in that particular instance, their credit would be looked at. Some of the other things like the tax returns and things like that you were asking about, bankruptcy would be an issue in that instance. But I just don't think those things are going to come into play on the merchant program.
Okay, so that's easy. How much does this cost?
How much does it cost? Well, this is some of the examples of what it could cost them if they went to the alternative ways. A conventional factor, as you were talking about, can charge anywhere from 24 to 30%.
Well, I think that's totally wrong. It could be 100%.
I know it is.
I was paying 100%.
Yeah,
I would advance in 30 days. I'd get a $1,000 invoice, and I'd give me $920, and that would be a net 30. They'd collect from the person. That's 100% APR. My
goodness.
Yeah.
That is really steep.
Right, but I was thrilled to get it.
Sure, you were. Sure. Yeah. So this is conservative, I suppose. That's all right. So it's much higher than that. Personal credit card. If they went that route, he's got 24% in here, but I think that would even be, that could even be much higher.
Yeah.
A lot of folks ask about private equity investors, and number one, private equity investors are difficult to come by right now. Because there's a lot of opportunity for those guys that have cash. If they do, they're cherry picking really. So. They're going to want a much higher return. Typically, they're going to want controlling interest. They're going to want to really kind of take over the business. So that's not an option for a lot of these folks. But a lot of them are turning that direction for that, for the reasons we mentioned before. It's just tough to find money right now. Friends and family, if you have any friends and family take the gamble, then typically they want a piece of the action also, and sometimes a substantial piece. So that's what money costs in general in the current climate that we're in. And then this is, again, it ranges depending on what they would qualify for. It could be as low as 6.5% on a bank loan that stretches out 3 to 4 years. So again, we can look at lots of different ways to get this done. The merchant program is typically at, like we talked about, 1.25
1.2, which is, if you annualize that out, it comes out to 20%. 1.2.
That's not
Sure.
bad at all for this kind of loan. Non-recourse? Are you kidding? I'd kill for that.
I know, exactly.
If I need the money. But let's look at some deals, and we're going to wrap up very soon. This one. Tell me about this one real quick.
Sure. And these are all actual deals currently that we're either working on or have funded recently. This is a barbecue restaurant. This one's out in California, I believe. We just got him approved last Friday for $52,000. This is a good example, and I think most of these examples you'll see this. He was working with one of our competitors. We were able to show him where we could pay off his current balance and also extend his payback terms from 6 months to 14 months. So the cost of his money, essentially, I believe the factor rate was about the same, but the big difference there is the time frame to collect our money or to have him pay it back went from 6 to 14 months. Substantially improves his cash flow. He was very, very, very happy.